Hey there and good afternoon everyone. This is Trader Tim from eminimind.com doing a market analysis video for the 29th of January 2018. Kicking off this trading week, we have the FOMC meeting announcement coming up on Wednesday, so it could be a slow couple of days. Today was an inside day on the ES, meaning that the high and low encompassed within Friday's high and low. And given that Friday was such another big up day with a big body candle, it's likely that the next couple of days could mimic today's price action. Now there's been some good moves, and the ranges have been pretty decent in markets like the ES and the Nasdaq. So expecting another good week of trading. As you can see, the retracement to the 50% down here has broken through its negative 23. Last week we paused at its negative 68 and Friday broke out of that. Today we pulled back right to that at the 28.53. I was talking about how levels like 2800, 2850, 2900, big round numbers can be magnets and act as support as well. So you can draw from highs to highs, and that gives you a little pullback to an extension that we also kind of have above us, 2866s. That's about where we opened today. So as we head into this week, it would not be surprising to see more upside, but also movement sideways, and the weekly chart especially indicating that we've had now 1, 2, 3, 4 huge big body candle weeks, and to get a little week like we had back here, or maybe even dipping down and then putting back up, closing back up near the open of the week is likely. So not saying that we can't go higher, but starting off the week by breaking yesterday's or Friday's trading hours only low to high, and closing the day at right about at lows. So the first 30-minute bar was our high for the day, and then about the last second to last 30-minute bar was our low. So that's sort of starting a new trend. We can draw from the recent swing low last week to highs, and we can see, oh, once again stopping right at that 50%. So even though we do have a little bit of a pullback and a break in the trading hours only short, it's still not, all things short. Today, we started off the day with a retracement that included the overnight high to this morning's low. And so before the market opened, I'd drawn up that larger short. We stopped right at that level, and then we traded down to the long, whichever way you want to draw it, from lows, which I like to do, to highs, or if you grab this little bit higher anchor point, same thing. The market stopped, held the 61.8, so then this becomes a no trade zone, and so I like to wait for the market to move out of this zone before placing any trades. And then once we broke down, we traded pretty quickly to the negative 23% target, and if I just draw up trading hours only from yesterday's highs, Friday's highs to this morning's low, we had a nice bounce at its negative 23% target. And so, oops, by letting the market kind of settle out Monday morning, get the first kind of directional move under its belt, then we can see, okay, well, the next setup from that high to the negative 23% target traded at its 50%, and then you can simply zoom in wait for that swing low to break, and then take the first short from highs down to lows that broke the swing low, and then look for an entry into that trend. And so by sort of solidifying the downtrend on the morning, it was okay in my book to go ahead and look for a couple of shorts. But the reason that I had the conviction to start looking at shorts is because it wasn't just one short that traded. This was the second short in the trend, and then we broke down, and then you can look for that entry into the next short. And there's a lot of movement in these inside days that we've had because the ranges are so big. If we pull up the market profile, we can see that yesterday or Friday is such a big trending day. Today's price action is it's still a good range, a wide range, and we can see how the point of control, or most of the volume, ended up taking place around Friday's value area high. So tomorrow, we'll be looking at these levels as a area of support and resistance. So we've got 28, 66.50, 63.50, and we'll call it the 58s. So I'll be looking at those levels as we go into tomorrow's trade. If we can hold this retracement overnight, 28.53s, then I have no problem, going back and taking longs. We can see the first short here and then second short here. And so I have no problem switching gears. However, knowing that the FOMC meeting announcement is coming on Wednesday, and that we are, if tomorrow's day is inside today's, it could get a lot tighter and you could see a lot more chop. So just be cautious on Tuesday and Wednesday and expect really good trading Thursday and Friday. If we look at the VIX, you can see a big spike in the VIX today. And we have started this uptrend. I've got this channel drawn. So keeping my eye on that. In a lot of cases, the VIX can lead the S&P. When we get a close above a swing low like this, it could be a sign that the market is going to be following suit and pulling back. So things are still looking bullish. Market's very healthy, but a little pullback here would not be a bad thing. And if we saw 2 down days last week, and so there is a little bit more selling coming into the market that's sustaining. And if we can continue that this week, then looking for a break of that 25.50 low would be a big level, because that's the previous swing low at this point, and then the low down here at 83.25s would really be the next swing low. But I wouldn't expect too many fireworks in the next day or two ahead of the FOMC. But that's kind of what I'm looking at for the week ahead. We'll be doing a live trading tomorrow. You can check that out, emoneymind.com/VIP. Totally talking about the markets, talking about my trade setups, and what I'm looking at throughout the day. Hope everyone has a great week. We'll talk to you soon.